Kashyap Javeri, who's head of research and fund manager at MK Investment Managers, joining us this afternoon. Kashyap, it's a very tricky market, right? How should one look at it? First off, thanks so much for coming and giving us your views. But give us a sense first. What is it that one should do in a market like this?
Sorry, your voice was breaking in between. Can you repeat the?
Okay, yeah, absolutely. So Kashyap, just trying. It's such a tricky market, right? What are you advising your clients?
Yes. Thank you so much for having me on the show. Obviously the volatilities have been part and parcel of the market for last many years. The way we have done it in the past is the same way we would try to ride this one also at this point of time. Of course, nobody knows where the markets probably will bottom in this whole war scenario. But what we are advising our clients is that when the volatilities are high, when the markets are giving this kind of opportunities to enter some of the names that probably you and us both have been looking at owning at some point of time, if the valuations are in our favor, as far as we are looking at a decent probably 20 kind of a CAGR return over a period of next 3 years, looking at what the exact stock prices are right now, let's work reverse way. Let's understand what's the fair value of that company and work our way reverse, in the sense that if we want to make this kind of returns over a period of slightly medium term, is this the right price to buy that particular name or not? And I think opportunities are sort of coming our way in that fashion.
Right. So, Kashyap, hi. Good afternoon. This is Snehi also joining in the conversation. Good to be chatting with you. So, based on what I just heard in terms of your strategy, would it be right to conclude that this is largely a bottom-up strategy and that is how you are going stock picking in the market right now?
Yes, absolutely. So, it is a bottom-up strategy. There are businesses that we like a lot. At points of time, maybe I like the business, but I did not probably like the valuations. Are they making sense at this point of time, given that the market is not probably thinking twice for acting on the rational or irrational fear, either way you want to put it. There are opportunities arising in the and just to give you some examples, if you look at probably space in the private banks, if you look at some of the space within capital goods, if you look at some of the names within auto ancillary, I think this kind of opportunities are sort of looking forward. In fact, our advice to clients is that if you were sitting on fence at some point of time, thinking that market was probably overvalued, or you didn't probably have that strength or let's say the guts to enter the market, probably this is the right and valuations are in your favor.
Very interesting, Kashyap. So it's very good to hear that you're really positive from a medium to long term perspective. As with a lot of participants, but you're talking about sectors, and give us that flavor. How are you looking at some of the larger private sector banks? Because each of the banks now, at least within the private sector side of things, have their own unique issues. Whether at the broader end of the private sector banks, you've got asset quality issues which they're just coming out of, or whether some of the large private sector banks, one, there's been a leadership issue. Second, there's been asset quality problems. Third, there's been a huge churn in the top management. So you've got all these sorts of issues. How should one pick, and how are valuations looking to you?
So I think we need to look at it in this way. Problems with equity investments have always been there, right? Which is why it's considered riskier than a risk-free asset, which may be a government bond, or a slightly riskier asset, which might be any fixed income product. And this is to do with, irrespective of whether the sector or the market caps, there will always be some or the other issue which a particular company will have. As an investor or as a fund manager, our job is to try to understand that is that problem going to make, if at all it's going to make, and if it is going to make any difference to our earnings, is it going to be material enough for me to change my decisions or not? I think if you look at across the sectors, the valuations have probably come to such a level that some of these issues, if they are exogenous, can be ignored. If they are endogenous, I would say over what period of time they can be resolved is something that we are looking at. I think in that sense, within private sector banks or overall, if you look at the financial services as a space, I think there are decent opportunities which are open. Given the fact that if you look at probably across the space, the valuations are today maybe I think most of the stocks are lower than what the broader market is also at.
Okay, so that's your take when it comes to private sector banks. Kashyap, what's your take when it comes to IT? It's been a sector that has seen its own share of hardships. And recently, when the markets have not been doing very well for themselves, IT has stood its ground and has done well. Of course, the fall in the rupee is also to some extent favorable for that sector. But overall, do you believe the worst is behind for IT?
Right. I think if you look at overall IT as a space, the way we are going about it is that our exposure to some extent is limited to the companies which are not necessarily only into IT related services. We own portfolio of companies which are into I would say the digitalization side of the business. I think if you look at overall earnings growth for the sector, it's going to remain probably lower than what probably the Nifty will grow at over next about 2 to 3 years, which means there are only selected pockets within IT space that we have invested in, and which are more to do with digitalization and the automation part. Pure play IT services, I think, as a portfolio, it forms a very small part of our overall portfolios for the clients, and I think that will continue to be so.
Interesting. And Kashyap, there's obviously going to be some impact of the West Asia crisis, right? What sectors, segments are you completely avoiding at this point? Because that impact could well mean that a couple of quarters or maybe 2 to 3 quarters of earnings will likely get really hit as a result of this. What are you completely avoiding?
I think being in the market, it would be probably very difficult to avoid a sector or a stock completely. The way we go about it is that, like I said in the beginning, it's going to be a bottom-up approach, right? So any company which today, for let's say next about 30 to 35 days or 45 days, is going to be impacted because of the West Asia crisis. Obviously, everybody knows that industrial LPG to some extent is impacted. Our conversation with a lot of companies in that sense is also reflecting the similar pattern, be it into very high energy intensive sectors like ceramics. Obviously the availability of fuel is impacting to some extent at this point of time. But if you go back in the history, a similar thing happened at the time of Russia-Ukraine crisis also, right? That until June 2022, which is almost 4 months post the war broke out, oil prices continue to remain very high. And probably post that we have not seen those kind of highs for a very long period of time. For those about 4-5 months, yes, inflation did impact the overall earnings. At least until December 2022, the inflation continued to impact the overall earnings for many companies in that sense. But anybody who entered the market around June 2022 has made phenomenal returns on their overall portfolio. So I would suggest that if you are doing bottom-up analysis, if you like a company, their business, the factors which impact the earnings today are exogenous and are likely to be there for next about, let's say, 45 to probably 60 days. I think it will be very difficult to avoid a particular sector or a particular stock in that sense. But the internal fundamentals of your company have to be really strong for me to warrant any any holding at this point of time. Exogenous factors, I think we can handle, for next about 45 to 60 days, and post that, I think, it's going to be level playing field for everybody.
Okay. Kashyap, on that note, we'll let you go. Thank you so much for taking the time out and speaking with us. Hope this becomes regular. This was a very good conversation. Thanks so much for your time.
Thank
Okay,
you.
viewers, on that note,